Recently, I completed the last sale of my apartments in Business Bay, which I started at the end of last year. Since then, I sold 2 apartments in Zada Tower and 1 apartment in Reva Tower. So today, I want to give you an update on my personal investor portfolio, discuss the reasons of why I chose to actually exit my investments, and whether I will buy back stock in this specific area or I want to diversify somewhere else. So if you followed my journey here on YouTube, then you know by now that my name is Gorasov. I'm a property investor. I'm not an agent. I'm not affiliated to any kind of developer whatsoever. I have bought my first property in Dubai around 5 years ago, and since then I've been adding 1-bedroom apartments in Business Bay. Nevertheless, I also bought into other areas, but right now I want to focus on my portfolio in Business Bay, which is the primary portfolio of mine in Dubai, where I do my rentals as well. All the 1-bedroom apartments that I had in Business Bay were for long-term rentals only. And right now I've exited all of them, so I am left with none in this specific area. So if you're curious why I'm doing that, what's the actual reason, and whether I'm going to get back, then hit that thumbs up button, subscribe to see more videos on the channel, and let me tell you the background story. So this video is going to be more of a personal update where I'll tell you the actual story, what's been going on in the background, what I'm planning for future, and whether I'm actually planning to invest more in Business Bay. As a property investor, I primarily care about numbers, and that's why you have to buy, sell, exit your investments, do it all over again, and only then this becomes an actual system and an actual business. And while I do recommend that you stay with your investment long term, most probably if you are not doing this as your primary thing, then having your property for long term paying off through rentals will make much more sense to you and will also give you some good capital appreciation. However, if you are a property investor or you are planning to get into property investing, then your investments should have an investment life cycle. In the best case scenario, of course, you buy it off plan, probably at a better rate. However, currently I'd argue that this is not really the case. But let's say the off plans are priced under the ready properties. You're actually able to get in there without even a mortgage, put your own money, leverage that, and when the property is handed over, you can actually get it to the bank, present it, and refinance it for the remaining parts of payments that are left to you. At least this was my main strategy. I was doing this with properties not only in UAE, but also back home in Moldova. It's more of a difficult, more complex process, but if you are an investor, you like this process, you like the journey of speaking to the bankers, the conveyancers, to the legal departments, trying to understand all the bits and all the criticalities of this process, and most importantly, try to find the ways how you can maximize your investment. So if we speak about the reason why I decided to exit my investments is because I approached the end of those investment life cycles. All the properties by now were ready. They were already generating me pretty good cash flow on long-term rental contracts. And while this is kind of contradictory that if those projects are actually working so well for you, why would you sell them? And why wouldn't you just keep that working towards building more cash and getting more capital appreciation perhaps in the future? Well, that's because those projects actually already matured. And while the rental cash flow was brilliant and I'm super thankful it worked out, I had to cash out on the capital appreciation and use that capital towards other projects. So reason number 1 is exiting for new exciting projects. However, the reason number 2 is the current mortgage limitations that I was facing. So I told you that most of the properties that I buy, I try to either get a mortgage right away or refinance them in the long term to get my money back and basically rent them out and have the tenant pay my mortgage payments. This leverage really works well if you calculate it right. You know exactly what's your exit strategy and you know that you have actually bought right. So I tell my viewers all the time that the most important moment and point in this investment life cycle is actually not when you exit, it's when you buy. So if you bought right, that's when you made the best and the right decision towards your investment. So considering that I bought right all these properties, I already knew what's the plan for the next 2 or 3 years. Usually I would try to plan for at least 2 to 3 years to exit, and in the worst case scenario, around 5 to 6 years. So it's not as sexy as flipping off plans and whatever people are trying to do in this market, but is very financially literate, is very calculated, and I know that at some point I will get it back and I will exit and reuse that capital towards new opportunities. However, when I tried to do that with my extra capital that I had besides those properties in this current market, I faced some mortgage limitations because in UAE, getting a mortgage, we know that is not the easiest thing to do. And I spoke about this in many of my previous videos. I even have a step-by-step guide on how to get a mortgage, a step-by-step guide on how to refinance your property. It's all free, so check it out in the links above. However, in UAE, there are rules that you have to follow, and with mortgages, the main primary rule that is there is the limitations on the LTV that you can have for your properties. What I mean by this is that for the first property that you purchased through a mortgage, your maximum LTV allowance is up to 80% as an expat and 85% if you are from the GCC countries. This means that my deposit was 20% and my loan from the bank was 80%. However, by the rules of the National Bank and also UAE in general, they limited this for the next properties. So if you want to get another mortgage, then your minimum deposit by law will be 40%, and the maximum loan that you can get from the bank is going to be just 60%. Nevertheless, I still use that, and it was possible to do it for the second and third property. However, at some point, it's getting more complicated, and you really need to prove the bank why you're doing this, why you're refinancing perhaps, and where is this money going for. Also, it's kind of normal because the banks don't want you to leverage the hell out of everything and get into a situation where you can't afford to pay them back, you bankrupt, and there is all kinds of legal consequences around this. So I can't really prove the bank that I've done this multiple times, more than 10 times in my life, and that I know exactly what I'm doing. I run my numbers really wisely, and I will definitely be able to pay them back and so on. That's why it's becoming a bit harder to do this with the next properties. So when I was trying to get newer properties, I was facing all kinds of limitations. That's when one thought came to my mind that probably would be easier to just exit the current investments and do it all over again. Not only I will be able to get another property after I sell everything as my first property once again and get the 2080 LTV, which is really favorable. I only have to pay 20% deposit, and numbers wise, it's usually working out super well. But also, it would be much easier for me to prove that this is just my first investment or my only investment. There won't be too many questions because usually for the first mortgage, they will check your income pay slips, they will check your profile, and whether you're able to actually pay for that monthly payment. So that's mainly calculated through looking at the debt to income ratio, which usually in most countries it's at around 40%. I haven't lost you yet? Well, if I haven't, then let me explain what this means. The banks will allow you to get a mortgage, a loan, any kind of this liability if your debt is not bigger than 40% of your total income. Let's say you're earning 30,000 dirhams per month, then the bank will allow you to get a loan if your debt to anything, including your credit cards and so on, will not go over 40%, which is 12,000 dirhams. In this case, if you're paying for your credit card, let's say at around 4,000, 5,000 dirhams every single month, then your allowance for the debt is going down by 4,000 to 5,000 dirhams. Let's say you're looking at getting your first mortgage and your monthly payment is at around 5,000 dirhams. Then in this case, you're actually allowed to get it because it falls within that maximum allowance of 12,000 dirhams. However, if you have some other payments, such as car payments or car loans, any other kind of personal loans that are adding up to a total bigger than 40%, or in this specific case, 12,000 dirhams, then that's where it becomes a little bit harder. Nevertheless, this is just one general rule that I wanted to share with you, because if you're looking at getting your mortgage, I think this is very important to know and to understand exactly right. My next limitation was actually that I was not officially employed. And when you're not officially employed in the UAE, it's super difficult to prove anything to the bank. Even if you want to just get the most simple credit card, you still have to prove that you have some kind of income going, and you will be able to pay the monthly payments. And while this limitation is still kinda in my way right now because I am not employed, I am working on my own, I have my own company, I still have to figure it out, and it would be best if I just approach the bank with my first mortgage, considering that I'm also not being able to prove any kind of official employment but my own company. Basically, if I would approach the bank with 3 or 4 mortgages and also not being even employed, they won't even tell me that it's possible to calculate my debt to income ratio, because the income is unstable and you can't really know what you're gonna get, even if you have a own certificate, own salary certificate, and you can say that you're actually getting all that income, the banks won't really take you seriously. So that's why the current mortgage limitations, also with the one that I'm not currently fully employed, are making it much more difficult to continue with these properties, and these were adding up to the reason why I decided to sell them up to get more capital and perhaps walk around different ways of getting into new properties. So the question, would I buy everything back, or would I simply just go back and invest probably in the same towers or just in the same area, which in this case is Business Bay? To give you a short answer, absolutely yes. I will do it all over again, anytime, any day. I still personally strongly believe that Business Bay is one of the best areas to get into Dubai real estate. It's one area that is actually becoming more limited because it's being built up, so there are not as many spots left there to build. So you will definitely have more demand in there, and most importantly, because it's super well located and it's much cheaper than DIFC and downtown, there will still always be demand from both short-term renters and also long-term stayers. So yes, to answer that question, I will definitely buy back. The way that I'm going to do that is not yet certain. Maybe I'll do it again through mortgages. Maybe I'll be able to prove that I have stable income through my own company, or perhaps I will just buy all in cash, since now I cashed out and I'm actually able to do that. It's much easier to buy the property outright in cash and then approach the bank for a refinance rather than getting the mortgage straight away at the moment of purchase, which also has many other implications against you. Not only it makes it more difficult, but also it makes it longer. You're not really able to have this leverage to negotiate the best price because you're always approaching agents or the sellers and telling them that you're a mortgage buyer, so they're not really taking you seriously. That's why in this case, I prefer to buy in cash outright, and only then at my own pace and ease, I would approach the bank and see whether I'm able to refinance it. Yes, it's going to be more difficult when you're self-employed, and while I told you the story, and probably some of you know that I moved to Dubai actually working in tech and combining this a few years ago, I was able to prove that I have a stable income. But now I really need to make it sure on paper for the banks, and I'm sure many of you watching me have the same problem. I know people who have deposits of millions in the bank and they're still not getting approved for any kind of mortgages. So while this is actually possible, you can make it work. You can make a different kind of employment to your own self. You can change the shareholders. There are many, many different ways. It still is a blocker that you would like to take it out of the way and do it somehow differently. Nevertheless, going back to the what's next topic. So why I would also cash out, not only because I am faced limitations and I want to just get the new stock, new properties, do it all over again, but also I have some other interesting and super exciting projects in the pipeline. They are more related towards the creative part of things that I'm doing, more related to YouTube and collaborating with many other creators. For that, I need a pretty big amount of capital to be invested into planning and organizing everything properly in Dubai. You need licenses for everything. So that's where most of this cash will be going to. And while I can't disclose the project right now, I will definitely keep you posted on what's coming up next. But nevertheless, I am always going to be looking back to Business Bay. And if I see the right opportunity, most probably buying cash outright for a distressed deal, then I'm definitely getting back in. And I wouldn't exclude even getting back into the same towers and even the same unit resales. Other than that, I'm definitely looking into other areas. I'm investigating the potential of Al Jaddah, for example, which is closer to me because I'm in Dubai Creek Harbor. I'm also looking around the Creek Harbor area, perhaps for some more bigger units, some more unique layouts, and even villas. Nevertheless, if you need help with your investment, if you need some advice on how to navigate these difficult processes with the banks and how to make it actually work properly for you, then reach out to me through the links below. My advisory company, Agora Advisory, is offering all services from consulting directly with me to sourcing you the right property through our very large network of agent collaborations, no bias, no affiliation to any developer. You just give us the requirement and we will follow right through to make it right for you. So I hope you found this update interesting, and if you have any comments or ideas that you want to share and write in the description below, then please feel free to do that. I will read everything, and stay tuned because I have some really exciting content coming up in the next months. So with that, leave a thumbs up, subscribe, and I will see you in the next video.